Hey, Rockstar, I just saw this.
I've owned over 2,000 pieces of real estate in my life. I've got several $100 million worth of real estate today.
Dave, Debt Buster Ramsey, the gift that keeps on giving. You know, he's advising a caller right now on using debt to buy real estate and suggested that his caller is an idiot too. Yeah, good stuff coming.
I've owned over 2,000 pieces of real estate in my life.
I ain't buying it. I mean, I smell a rat. If you can prove me wrong, I'll apologize, but nah.
I've got several $100 million worth of real estate today.
Several $100 million. That would be at least 3 times, right? Isn't that what several means? Yeah, dictionary says it right here. More than 2, but not many. So at least $300 million worth of real estate. Now, MoneyMade.io says Dave has a net worth of only $200 million. Wealthy Gorilla confirmed that, and so does CelebrityNetWorth.com. Now, I don't know how they come up with their numbers, how they figure that out, but if they're right, Dave's embellishing a little bit.
If I was on TV every damn day, man, you know how rich I would be? Dave's worth about 50 million bucks. Okay, that's what my plane costs. He ain't buying a plane.
If that's true, Dave is embellishing a lot. By the way, per celebrity.fm, there's no evidence of Ramsey owning a plane. So for him to be worth $200 million and own $300 million of real estate, he'd have to be carrying debt on that real estate for both of those statements to be true. And we all know how Dave feels about debt.
I don't borrow money, period.
So, no debt on that real estate.
So I live 100% debt free.
No debt, period. Now, I don't hate Dave. I don't even know him. But when you speak in superlatives with so much conviction, you open yourself up to a lot of criticism. But here's what this is really all about when using debt to buy real estate. There are 2 ways to do it. Here, listen.
One thing I know for sure is if you tell me the renters are going to pay the payments for you, that tells me you've never managed rental property.
That's a flagrantly bold statement. Dave knows for sure that if you tell him that renters are going to pay the payments for you, that you've never managed rental property. And I just couldn't make sense of that. The 2,000 pieces of property he said that he owned, I mean, if he referenced those properties in this context, they'd have to be rental properties, right? His point wouldn't make sense if they weren't. And if he didn't collect rent from 2,000 tenants, what was he doing? If half of those tenants didn't pay, he didn't know what he was doing. If just 1/4 didn't pay, he was just doing it flat out wrong. If just 1/8 of his tenants did not pay him, he's not the person you want to take real estate advice from. At all.
Dave Ramsey got his real estate license at the age of 18 and began investing in real estate in the early 1980s. He'd buy properties, fix them up, and then flip them for a short-term profit.
So he was flipping properties, no tenants there.
So what do most investors do when they finance real estate flips is that they take out short-term loans to save money.
The term for these types of loans is typically 1 to 3 years. And there's not much risk there because the investor will finish the flip way before it's due and pay off the loan. But if things don't go as planned, as they can, you've got some cushion with that 1 to 3 year period.
Or you could do what Dave Ramsey did, which was 90-day loans.
These loans are so risky that banks, they don't even do them anymore. Debt is an expert's tool that anyone has access to, but you must know how to use it expertly.
Now, loose lending practices in the 1980s made this extremely attractive for real estate investors because you could buy a property for cheap, fix it up, and flip it within 45 to 60 days, pay back the 90-day loan, and you are done. So once the deal closes, you've paid off the loan, you've made your money, and it's on to the next one. This is how Dave Ramsey was able to make a substantial amount of money in his early 20s, and much of this was due to speculated real estate investments.
Don't speculate. Don't gamble. We don't advocate that here. And certainly don't use debt like Dave if you do. Using debt to purchase income property is not this. I mean, if that's what he did, no wonder he hates debt so much. I mean, but was it the debt's fault when things went south for him, or was it Dave's?
Dave Ramsey invested in a real estate market that was fueled and inflated by investors seeking tax deductions on 90-day loans looking to flip them for a quick profit. And that is, you guys, incredibly risky and incredibly stupid.
When using debt to invest in real estate, don't be Dave.
One thing I know for sure is if you tell me the renters are going to pay the payments for you, that tells me you've never managed rental property. That tells me you've never done it.
Actually, that statement more likely tells me that Dave has never done it.
That's 100%. You are a novice at best, an idiot at worst. And I mean, that's the truth, because anybody who's ever had a renter or been a renter, and I have both, I've been a renter too, it knows that sometimes renters don't pay.
True statement. Sometimes they don't.
One thing I know for sure is if you tell me the renters are going to pay the payments for you, that tells me you've never managed rental property.
Anytime you hear everybody or nobody or always or never,
that tells me you've never managed rental property.
You're being lied to. As when you're really an expert in your field, you know that first, there are always exceptions. In real estate, there's a bunch of them. I mean, there are a lot of variables, there are a lot of moving parts. And every answer to a real estate question should really begin with, it depends. And second, the negative stuff that he's referring to, that resonates with us far more than the positive stuff. Far more. That's the stuff that we always remember. For example, at the peak of my portfolio, about 350 units. Oh, real estate investors don't say pieces of property, by the way. That was another thing that fired off my BS detector.
I've owned over 2,000 pieces of real estate in my life.
When I owned those 350 units, I knew the names of probably about 13 of my tenants because they were problems. They were always breaking stuff. They were complaining. They didn't pay their rent on time, if at all. I knew their names because I heard their names in the office all the time. And they were a moderate annoyance, but I didn't lose sleep over them because I had 337 tenants that were good ones, that were current with their rent. And because they were, I couldn't tell you any of their names. The more tenants that you have, the more insulated you are from the shitbirds. The mortgage payments are being made. So if Dave had those 2,000 rental properties, he should have been like, 6 times more insulated than I am. And absolutely his tenants would be making the mortgage payments for him. Anyway, Dave went on to support his, that tells me you've never managed rental property with this.
Sometimes there's cancer. Sometimes there's car wrecks and job loss. Sometimes there's a pandemic. Sometimes ...
These aren't false statements. I mean, shit happens sometimes, but sometimes doesn't bring your empire crashing down. And it's certainly not a reason to avoid real estate and then come down on your caller suggesting that he's an idiot. And the more units that you own, the less that you feel those sometimes moments. That's the very thing that makes multifamily property investing so appealing. I mean, your risk is spread out across multiple units. It's one of the primary reasons people invest in them. And I don't know if you caught this, but he's making a case for his never statement with a bunch of sometimes statements. I mean, if your spidey senses aren't tingling a little bit, I've got a bridge in Brooklyn I'd like to sell you. I could actually do that, by the way. Did you know that? Yeah, fun fact. It's called a quitclaim deed. And what that does is it allows me to sell you actual title in a property that I may or may not own. That's right. No guarantee to a buyer that I even own what I'm selling with a quitclaim deed. And per my latest Google search, it's perfectly legal to do. By the way, I do have some up-and-coming swampland in Florida for sale. Super cheap, too. It's 5 full acres of oceanfront property for $10,000. That's it. It's the deal of the century. I mean, here's the deed right here. Send me $10,000 and I'll just sign over all of my interest in the property to you. No, don't send me any money. But that's how the scam works. And it's legal. And that has nothing to do with Dave, by the way. Just a spontaneous, teachable moment. Back to Dave.
It's, as if there's a perfect stream of every month the rent is going to come on time or early and you can pay your stupid little payment.
So no, the monthly income stream isn't perfect. And it does take some time on your part to make sure that that stream flows. But for my 350 units, it was like, maybe a 4-hour work month. It sure beats a 40-hour work week.
No bosses, no work.
By the way, if you'd like a copy of the 4-hour work month, it's a simple one-pager to get your rental properties running smoother. I made it easy and uploaded it for you at the4hourworkmonth.com. Now, I want to give Dave the benefit of the doubt because I've never met him. There's more to the story, I'm sure. But when you say things like, that tells me you've never done it, with emphasis on the never.
Never?
Never.
That statement could steer people away from the final frontier where they actually have a shot at creating epic wealth. That could hurt people. His advice may keep his audience safe, but they'll be just over broke dealing with that job for the rest of their lives with zero chance of getting wealthy or even just financially independent.
And that's the most ridiculous assumption.
Actually, it's not a ridiculous assumption. If, and I mean if, with a capital IF, it works out, the best years of your life are behind you. You've got 1 foot in the grave by that time. And I think that's ridiculous because most people, they just don't make enough to save enough for Dave's plan to pan out and then to be able to enjoy it while you're still young enough too. I mean, if you disagree with me or if you're even on the fence with what I'm saying, call up Dave. Ask him what your real alternatives are. Like, especially if you're in your 40s or if you're in your 50s, ask him what sacrifices you're gonna have to make to catch up so you can retire before the age of, 70, if you even can. It takes a long time for compound interest to do its magic. Will you still be alive when the trick pays off? Compounding income-producing assets, that'll get you there faster. It's the only way to make up for lost time. And if you use other people's money to compound those assets, it's 5 times faster than that. Hey, if you're okay with what Dave says, I'm okay with it. If you're happy with his plan, don't listen to me. With so many videos like mine that are anti-Dave, maybe I just fell into the trap too of giving him more exposure. If you're not okay with what he said though, because you've actually done the math like a smart person,
simple math,
you've got to take your finances into your own hands. If you'd like some help, call me. Go to reiace.com and then we'll hop on the phone and hammer it out. Thanks for watching. See you next time. Take care.